Are you putting investors at ease, and are you looking out for new investments? Kind of what's your focus?
So, as you mentioned, as a CVC, we don't have any investors that we need to go to other than our headquarters. But, if you look at what we're doing, given our strategic nature, we have always spent a lot of time with our portfolio companies and have a really long-term view. But I think we're spending even more time with our existing portfolios, given the current environment. So obviously, I think we're doing what everybody else is doing. We're keeping tabs on how the companies are doing, what is their cash reserve, monthly burn, short and midterm funding needs, as well as the business impact, and how we try to sort of bring value to the portfolio company that we have is to actually facilitate more collaboration opportunities with different business units that we have in the company. And obviously, if you look at the new investments, I think there could be a bit of slowdown, but we haven't had that big of an impact yet. And the reason why we think there could be a slowdown in new investment is not just because we're being more careful, but because even the companies and funds themselves have a longer or revised timeline for fundraising. But every week we're still reviewing new opportunities, and we'll continue to invest.
Great. Same order, Nico.
Yeah, thanks a lot. So really the question is what we are really focusing on right now. For us at Fundraise Ventures, our main focus right now is to look out for new investment opportunities. We believe there are many viable businesses out there, many viable startups out there who have good products or services that customers are willing to pay for, but may have a little bit of difficulty getting investors to invest into them right now because the animal spirits have disappeared from the market. So you have a good business which is investable, why not we take a look at it? If the valuation is reasonable, why not, right? We do have quite a number of existing portfolio companies. Some of them are raising at the moment as well. So we will take it on a case-by-case basis. If the portfolio companies have demonstrated good customer traction, they have a viable business, they have asking for reasonable valuation, we are well prepared to actually top up and follow on. The investment fundamentals doesn't change. We still look for investable businesses at reasonable valuations. But given the crisis we have right now, what we would be looking for is that the founder themselves or the team are very cognizant of the difficulties that the economy faces right now. They are very cognizant of the difficulties that their customers face right now, and they're also taking care of their staff welfare at this point in time. So we want to see these kind of things, the founders and the team being very proactive and making sure they hunker down and to position themselves in the best way possible until we get to the other side of this crisis. What we don't want to see is having a team that does not seem to be aware of the issues that the economy face and just proceed business as usual. So I think that's what we want to see.
Nayoung?
Yep. So for us, just like what everybody else said, things really haven't changed in terms of our due diligence process or investment strategy or focus. But for us, the thing that's a little bit changing, but it's not really just because of COVID-19, but it started late last year. Because of our background and our focus on technology, we used to sort of traditionally look at very deep tech, so sometimes very early stage companies and or teams, and we focus a lot on betting technology. But we realized, I think I mentioned this before, technology just in and of itself didn't really work out in many cases because we're not academia. So I think we are seeing more and more sort of evidence that there is a need to have the real demand and market for it. So we're increasingly paying more and more attention to the business and financial side of the company when we look at the company. So sustainable unit economics and the roadmap to profitability and so forth are some things that we're spending more time on now than before.